Well, we might not just use a clock to tell time. There's also such a thing called a mining clock, which can help us understand where we are at in the mining cycle and how we can prepare for the future. With me today is Bob Thompson. He's the Senior Vice President and Portfolio Manager over at Raymond James, and one of the believers and original creators and embodiments of the mining clock. So welcome to the show. Happy to have you here at the PDAC.
Great to be with you, Daniela.
And not to use the pun of timely, but it's a timely time to talk about this.
It really is, because there's a lot of confusion, I think, in the industry these days. You've got Barrick, you've got Newmont, you've got Goldcorp, you've got lots of things happening, and you can tend to forget where we actually are in the cycle and lose the big picture.
Well, first and foremost, tell us about what the mining clock is and how we can apply it.
Right. Originally we came up with this idea because we manage money for mining executives, their personal net worth. And because of that, you can do the round trip a lot in this industry. You can go up and down and make it all, lose it all over again. So it's important to know kind of where you are in the cycle so you can plan for that going forward. And the mining clock is just a simple way to see what's happening in the market, reverse engineer that, and then tells you where we are in the cycle. Are we near the end of the cycle or the beginning of the cycle? And it tells you whether we're in a bull market or bear market.
So it's using what kind of data to compile?
Right. There's natural forces that happen in the market. For example, companies at the end of the cycle are generally over-leveraged, big companies, and then the cycle turns down, and that leverage obviously causes some problems. And it caused problems with some big companies, a couple of years ago in 2015, where they came really close to bankruptcy because of that leverage. Then the metals prices stabilize. Things start to go up and they reduce their costs, they become cash flow positive. It's just a natural point. And all of that happens from about 12 o'clock till 3 o'clock.
So Bob, where are we at now in the cycle?
I would say we're around 6:30 right now.
Okay.
Now the buy time for this sector is from 4 o'clock until 8 o'clock or 9 o'clock. And right now we're about 6:30, so this is buy time, which started back in 2016.
Now, does the clock matter and change upon if it's a junior, mid-tier, a major producer? Does it matter?
It does. Juniors usually do well later on in the cycle. So around 7 o'clock, and that's why I'm saying we're not at 7 o'clock yet, that's when you start to get a lot of junior IPOs. Right, because people are becoming interested in the sector, they're willing to give capital to junior companies that want to go public. We aren't seeing a lot of that right now. We're seeing private placements, but we're not seeing small companies go public.
Can the clock be used to determine or predict behaviors of management of the companies, like the mega mergers? You brought up the talk of now Barrick buying Newmont. How does it price that in?
It certainly can be, because what happens at this point in the cycle at around 5 o'clock is that the senior companies realize they've become cash flow positive, they've reduced their costs, metals prices stabilize, and they realize that they have to increase their pipeline, right? They're diminishing their resources, so they have to either buy other companies that have good projects, and there's not a lot of great projects, or they have to do these mega mergers so that they can have a company in 5 years.
Bob, you also say we're at the first third of a bull market.
I think that's so important, and people fail to realize that bull markets, no matter whether it's technology or the S&P 500 or the commodity market, you can break it into 3/3. The first third, hardly anybody participates in. And why is that? Because the bear market was so nasty, so bad, that people don't want to have anything to do with the sector. I think that's where we are right now. We're coming to the end of the first third, and the bull market started at the beginning of 2016, but very few people are interested. The second third is when institutional investors start to come in and say, maybe we should start buying into the commodities. Maybe gold's going to do well, maybe copper's going to do well, and they start to pick and choose. And then the last third is usually when the retail comes in or the speculators come in, and you get a big surge and then the big blow off.
So how far away are we from those highs of 2011?
Well, the interesting thing about the mining clock is that it doesn't follow real time. You can
Unfortunately,
You can back up sometimes. 2018 we've been stuck, or maybe even backed up a little bit. But normally, I think 3 or 4 years from this point would be the getting to be the frothy part of the cycle.
That's really cool, Bob. Where can we learn more about this mining clock?
Well, on my website. Miningwealth.ca, actually, which is a nice, easy thing to remember. There's an interactive chart there of the mining clock, so you can click on each number and it'll tell you and give you a pop-up.
Oh, very interesting. Bob Thompson, thank you so much for stopping by.
Fantastic. Thanks, Danielle.
And thanks for watching. We'll have much more for you on Kitco.com.